All right, guys. So we're gonna fire it up here. So today we're gonna talk about, as promised, today we're gonna talk about trend trading, and I'm gonna give you three tools that you can use to to get in on these trends without indicators. And it largely depends on the type of market you're looking at. So that's kind of how I'm going to approach this. My first point of emphasis is you have to determine what kind of market we're in. And there are two parts to that. And then after you figure out what kind of market we're in, then you can decide which tool, as it were, to pull out and use. And that's really what this is all about. Okay? So we'll go ahead and get in on naked trend trading right now. So is there a particular market that you would like me to examine in the beginning here? We're going to have to look at multiple examples. So if your market isn't chosen right now, that's okay, because we'll have other opportunities to look at other markets. Looks like the euro. Okay, Mr. C says the euro, which sounds pretty good to me. So let's do that. Those of you that follow my trades know that I'm waiting for the euro to trigger my sell order on this weekly chart here at 28.09. I'm targeting 26.90, 25.50, and finally 22.90 down here. So this is a market that I'm definitely watching at the moment. Let me show you on a different time frame chart, though, kind of what, well, actually, it's probably not a good one. You know what? We'll use the daily. We'll use the daily. Let's do that. All right. And actually, I'm going to get off of this chart because it's got all my weekly stuff set up. So I'll just go to this one. This will be easier to manage. And I'll go ahead and dump all of my extra stuff here, like the lines and rectangles and trend lines and arrows. All this stuff I can just get rid of. Like that. Delete, 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 delete. Okay, cool. So it's much cleaner now. And delete and delete. I just have to occasionally purge this stuff off my charts to make it nicer. All right, so let's talk about the first step when we're trend trading without indicators. Because you don't have an indicator to tell you, and I actually think this is a good thing, to tell you whether or not the market's trending, like the ADX or maybe a MACD or moving average or whatever you use, momentum or something like that. You could possibly even use a stochastic to tell you if the market's trending. Essentially, when your stochastic overbought and oversold stops working, then you know you're in a trend. But anyway, so what I would say is the first step is, are we in a trend? Okay, and the easiest thing to do is ask a little kid about 6, 7 years old, is this line going mostly up, mostly down, or mostly up and down? And I think most kids would probably tell us that this line's going mostly down at the moment. So we know we're in a downtrend. Now the second step, after you determine whether or not the market's trending, is what kind of trend is this? And now this is very important because depending on what you come up with here, it's going to determine what you can use as your trend entry tool. So I'm going to show you multiple trend entry tools here, and they're not all going to work with the same style of trending market. And every market has its own personality, but beyond that, you can still be trading the same market. And like, for example, we have a downtrend right now in the euro. Well, there have been other downtrends in the euro that didn't quite act like this one, and I'll show you real quickly what I mean by that. So let's just go ahead and say that the downtrend didn't really start on this pair until it broke this line right here. Let's just use that as an arbitrary, and this is kind of how I actually look at this market, so it makes sense to me. But as soon as the market busted, like this candle right here, okay, that to me was like the sign that, you know what, this seems like a pretty good, line in the sand. The market had bounced over here before, and it had been pretty much just riding it out from early this year, and it boxed up here. Maybe you extend this out to this area or whatever, but essentially it didn't really break this consolidation area of approximately, the range was about 480 pips. It didn't break that until this candle right here. So at that stage, I'm saying, all right, we're in a trending market. Now the next question is, what style of trending market are you in? And I basically break them down into really volatile retracements versus almost just quiet consolidations rather than retracements. So if you think of it in two terms, you could think of it as like a very aggressive volatile market versus quite a quiet restrained market. And this trend so far certainly meets the requirements of what I would call a quiet retracement market. So it's a very quiet and orderly trend. So if it's quiet and orderly, what you will typically see are, those retracements that don't really go anywhere, okay? And that's what we have here. We have retracements that aren't really going anywhere. In other words, it's not that the market is, reversing the downward move. It's just like it's just quiet. It's just quieting for a bit. So, for example, here the market's fallen. It's consolidated. It's fallen. It's consolidated. It's fallen, consolidated, and then it just keeps breaking beyond this consolidation, right? Now, and we're actually in another one right here, I would argue, at the moment. It may change, but we're basically in another one until it breaks through the support level that I have drawn on here at 28.37. I would argue that we're in consolidation right now in terms of the Euro daily chart. So once I've identified this as a quiet trend, that leaves only a few options in terms of how am I going to get into this trend. And it's very different to a volatile trend, and I'll show you that. I'll show you one of those in a moment. So when you're in a quiet trend, you can pretty much bank on the fact that if it's being orderly, it's in quiet, it's not going to go very far during the retracements or during the consolidation, I should say. It's really more of a consolidation. So this drop was 323 pips, and it's only retraced about 169 pips, right? So it hasn't really gone, a lot. And that's actually the biggest pullback we've seen. Although you could also make the argument that what we're really seeing here is two little tiny retracements. You got a little retracement here, right? And then it dropped down with this big red candle right here, and now we're in a second retracement. You could also argue that, and I wouldn't have any problem with that either. It's just that, it depends on how you look at it, right? It depends on how you look at it. So this is what we would call like a quiet, orderly one. All right. So what the question remains? Well, what do you do? Okay, you've identified you're in a downtrend. You've identified that you're in a pretty nice, orderly downtrend that doesn't have major retracement moves. So how do you get in on these sorts of trends? Well, one of my favorite ways to do it is to use what I call the momentum entry. Now the momentum entry is very different to the indicator momentum. What I'm simply waiting for is momentum in a candle to lay it all on the line for me and show me what's happening. And that is that, we're ready to go. We're ready to go. We've had our little fun, retracing, and now, It's time to fire it up and let's just go. That's kind of what these candles tell you. So the rules of this would be to wait. One, you want to wait for a downtrend. Two, you want to wait for consolidation. Is everyone clear on what a consolidation looks like? Consolidation, if it's not something that, if you are not, if you haven't been to one of these webinars, essentially consolidation is going to mean that, and when I say consolidation, I mean consolidation / retracement. It doesn't really matter which. Retracement is just more of an aggressive return against the trend, but essentially a consolidation is going to be mixed candles. So they're going to be up candles and down candles, so there'll be different colors like this. If you use black and white candles, they'll be black and white. I like to use green and red, so they're green and red. If you like blue and red, then they're blue and red, or pink and green, or whatever you use. But essentially, they're going to be mixed. They're going to be tinier, smaller than the big trend candles, and they're going to start to show a lot of wick. And you can see that that's exactly what we have here. The trend candles have very little wick, and they're large, like this one, like this one, like this one, like that one, even that one. And you could argue this one as well is also a drop down to another level. So it's a big candle, it's got very little wick, and it sets itself apart from the mixed candles here, where they kind of get really tiny, they start to show wick, they're indecisive. You'll often see green, and then a red one, and then a green one, and then a red one. Now we've got 3 reds, and then a green, and then a red. They'll just sort of alternate in terms of whether the bulls or the bears win that time period. So that's what a consolidation looks like. Consolidation is small candles that show wicks, and they don't go very far, right? So the question is, once we have a smooth, defined, low volatility trend, and it shows us a really nice consolidation box or retracement area, the momentum entry is simply to wait for a large candle to break out of that consolidation and show us that it's ready to go. And that's a very simple but powerful way to get in. So on this, we can go back in hindsight and say, well, that would have been a good one, and that one would have been a good one, and this one would have been a good one, and so forth. But let's talk about what a good one would look like right now. If we were to get a big red candle that would fall below and close well below this support level at 1.2837, the stop loss I would put above these 2 candles here. So I think they have equal highs, 29 and 28. So yeah, so the green one actually has a higher high at 29. So the stop goes at 1.2930, right here. That's the stop. The entry would be on the close. So as soon as the market closes with a big red candle below here, I'm in on that. So it could close. It could be a big candle. Like it might be a large candle, and it could close all the way down here. So you're looking at 162 pips. That's not a lot on a daily candle, really, right? And so that's kind of the easy way to get into these, refined low volatility trends, is to use the momentum entry. Are there any questions about that? I see on here it says so is this going to give a correction as per seasonality or Euro Swiss at lows? Right. I'm assuming this is about the euro, obviously. Yeah, we don't know. All we know right now is that the market's giving us a downtrend, and it's giving us very minimal retracements. So that's the pattern, until further notice, right? Yeah. So, and that's why I've chosen. That a lot of times I prefer to trade markets that look like this. It's not always the case, but a lot of times, like on the New Zealand dollar or the Aussie dollar, you'll see it like this. Now, every trend is different and has its own personality. You can't just blanketly say that every trend on the New Zealand dollar is going to be like this, but a lot of them are. So you kind of find pairs that have their own personality. Again, this could turn around and have an uptrend for the next 12 years, and it might be totally different to this downtrend that's happening right now. But in general, you just look at it and say, well, how far are these retracements going? Are they really going high and making their own little peaks, or are they just kind of stopping and waiting there? And this is kind of one of those stopping and waiting type retracements where it doesn't really rebound and go very far. It's just stopping, consolidating, and then falling further, right? So these are the real easy ones to trade, to be completely blunt. And if you've read the book called How I Made $2 Million in the Stock Market by Nicholas Darvas, he actually describes, this is back, I think he was around in the 40s, or I think it was the 50s that he was trading. That's a story about the guy who was a dancer, and he was dancing all around the world, and he was trading stocks at the same time. He didn't, he wasn't really watching them. What he did is he just waited for stocks to do this, basically, and he would get in and add positions every time they broke out of these little boxes. So he's waiting for these really quiet, orderly trends. $2 million was a lot of money back in 1952, right? So that's basically what we're doing here. We're trading the boxes. And the trigger candle, of course, is a big red candle. So in this case, like I said, if we get a big red candle here over the next couple days, ideally it would be today or tomorrow would be the best days for this to happen. I wouldn't want to necessarily, take one of these on a Friday or a Monday. Those are usually not the best days to get in on a trade, just because the market tends to move counter trend on those days, but not always, but often. So I would like it if today ended up being a big red candle, or perhaps tomorrow. Those would be the best days to get in. And then what about targets? Well, we can certainly go pie in the sky. We can go by RR. So we go if I'm risking 160 pips, I'll go for 320 or 400 or something like that. You could go to this zone right here, but depending on how big this red candle is that we get, it might not be a really good reward to risk ratio. So you might want to go a little bit further and target 2420 down here. So does that make sense, guys? This is pretty simple stuff, yeah? Makes sense? Danny? No problems, Edward? You with me, Glenn? You with me, E-Bear? Awesome. Okay, Kevin. All right, so let's go to the next style of trend. Did anyone say, all good, says Chris. Thanks, man. Chris said pound New Zealand. Chris, I'm going to use yours now. Perfect. I'm glad you said pound New Zealand, because we've got something special happening here. Now this, my friends, so we ask our 7-year-old consultant, is this line going mostly up, going mostly down, or going mostly up and down? And we'll probably hear something about it's going mostly up. So we know that we're in an uptrend. Now I'm on the pound New Zealand 4-hour chart, thanks to Chris H. Chris H said, go for it, and go ahead and get in on the pound New Zealand. So that's why I'm using this one. So now we say, all right, this is a previous peak high right here. So we're waiting for the market to clear that high, which it did over here. So now we say we're in an uptrend. But now what I want you to notice is, how is the market pulling back on this uptrend? It's very different, isn't it? It's actually making more steep retracements. See how it's going down further? I don't really mean to draw trend lines to suggest that the market's respecting that trend. I just want to give you an overall impression of what's happening. It's going down. It's going down. Whereas before it was just sitting there. Now we're seeing strong down moves. So the way that you play these is very different. What I like to do is go off of the bounce. So you look for the highs here. I've got a peak high here, and then I wait when it goes up and then it does this retracement thing. I wait for the bounce off of that high, right? So this is just a retouch entry. It's very different to the momentum. Kind of like if you read the book Naked Forex, it's very similar to the Last Kiss entry, right? Or the first touch trade. If you're familiar with the first touch trade, it's kind of like that. Not really, but it's same principles where we know that the market's topped out at this level, and so because it's come up and then pulled back so strongly. In fact, we had 1, 2, 3 pullbacks here. The third pullback finally went deep enough to bounce off these highs. Now, it's touch and go whether you go in on this one. I probably wouldn't because it's not bullish enough. I probably would wait for this candle to confirm because this candle didn't even confirm. It didn't close higher than this candle. There's 2 ways to get in on these. One is to put the buy order above the high. This is an uptrend. Obviously, if it was a downtrend, it'd be the opposite. It'd be below the low. But you put the buy order above the high here, and the stop loss is down here below the low, right? So that's a 90 pip stop loss on a 4-hour chart. On the pound New Zealand, it's moves a lot of pips. So 90 pips is not a lot on a 4-hour candle, believe it or not. So a 90 pip stop, 96 pip stop, something like that. Now, I put the order just above the high. If I do that, then this candle does trigger it. My stop loss is down here below the low at 99.69. If I wait for the candle to close above my trigger candle here on the retouch entry, then I'd be up here on this close. And obviously that's going to be a really deep stop of 208 pips. So that's essentially the retouch entry. Now, what do we wait? One thing is to look for a possible double top. So I could have a target right around here, and you can see where this candle stopped. That would have made for a good target. That would have been for about 200 pips on that one. The other thing is I can just go 3 reward to risk ratio. So I should go for 270 pips, right? You can just go 3. So I would have cashed out somewhere around here, and I'd be out. I could still hold a little bit, but that's another way to do it. So if I was risking 90 pips, I would have cashed out somewhere around this peak right here, this recent peak. Chris says he's short the pound New Zealand. Ah, right. Yeah, see, I wouldn't do that, especially with the busted kangaroo tail, Chris. See how the market gave us this kangaroo tail here? If you follow my trades, you know that I was interested in a short here, right? I was definitely interested in a short. However, remember I was talking about Mondays and Fridays? This was Monday's candle right here. And I wanted it to print before I was going to get in on the short. So although Monday's candle did in fact went lower than Friday's kangaroo tail, which technically is not a kangaroo tail because it closed a little bit too low, but it still is a pretty good looking candle. And because Monday made the low, then my order goes below Monday's low, not Friday's low. And so then Tuesday, of course, yesterday, it just blasted through where the stop loss would have been, so it invalidated that short. So to me, we're in an uptrend on this pair. Even if I don't pay attention to the 4-hour and just look at the daily, I can say that, yeah, we're in an uptrend here. So that's why I wouldn't short it, because it's got a busted kangaroo tail and it's got this really strong trend. But there are opportunities to get in, and one of those opportunities is on the retouch. So let me ask you this, guys. Where would you get in on this uptrend if you wanted to take another retouch entry? Where would you find it? Where would be a good spot to get in at? Mr. C says, congratulations, I'm long the euro. Oh, wow. Yeah, I mean, I've got a pending short on the euro. It hasn't triggered, but um, 7 candles in. 1, 2, 3, 4, 5, 6, 7. 201.80. 201.80. Let's see what that is. 201.80. Yep, that's right. Yeah. Right around in this area would be perfect. Now, it was kind of a trick question, guys, and I didn't mean to throw you off, but basically, yeah, right around this area right here, 201.80, 201.90, right around this area would be good. Here's why it was a trick question, because you had two sort of candidates. The first one was right here, off of this high. The problem is there's only one thing here. There's a better spot, though, given that we know it's a volatile trend anyway. This one was a lot better because it's got 1, 2 candles that touched it, 3, 4 candles that touched it. Whereas this other one up here with the kangaroo tail it's only got 1 candle. So right now we're on top of the first, kangaroo tail. But if it pulls back further, this would be a great spot for a bullish candle to get in on a retouch entry. Again, if we get a nice bullish candle down here around 201.90, 201.80 area, where would the entry go? It would go 6 pips above the high, plus the spread, above the high of the bullish candle. Stop loss would go below the low of the bullish candle, or whichever candle has the lowest low in that area. Because there might be another one that has a slightly lower low. So that's a retouch entry, and that's a really easy way to get in on trend trades, trend entries when the market's being volatile. Let me show you another example of one of these. They're a little bit trickier than the easy ones to see. Anyone want to throw one out? Euro Aussie. I was just going to click on that. Thank you, Joe. Yeah, so Euro Aussie's exactly the same. Look at this, guys. Perfect, Joe. This is perfect. I was just going to click on it too. I'm glad you said it. So Euro Aussie, so you've got this peak here. So let's say you say we finally break it and go, we're in an uptrend here on this candle. So you got a deep pullback down here to this area. Boom, it goes up. Another pullback. You don't really get your bullish bounce here. And to be honest, I don't really know why you would expect it to bounce here anyway. That was definitely a weak candle there. Also kind of weak here. But you do get a nice bullish candle here for a retracement entry. Oh, here, I'm looking for my arrow. I'm like, where's the arrow? There it is, right there. Boom. That's kind of a nice spot because it dipped lower and then it went boom like that. It would have been nicer to get a slightly more bullish close, especially above the open of this bearish candle, but it's off of these lows and these highs. It's a really nice dip here. If you added these two candles together, you get a pretty wicked candle that would almost be a kangaroo tail. Not quite, but almost, because this closes a little bit weaker than it should have been. And then you get another one right here, which is just brilliant because, look, it's right on top of what? Right on top of this high here, which also coincides with these highs over here. So this is a really nice boom, bam, and bam. Yeah, so this is definitely deeper retracements. It doesn't get quiet, it actually goes deeper. The only thing I would say about this one is that you didn't really get any signals here. This is definitely not a bouncer. That's not a bounce. This is a bounce. That's a bounce. And maybe we'll even get another one. I'm not sure. I mean, this candle hasn't closed yet, but we'll see. But that's another deep one. I'm assuming that you probably see something similar on our good friend, the Pound Aussie. Yes, you do. Trending up. It clears these highs over here, so we're going up. You get deep retracements, really deep here. No real good signal here, but This one's okay. It would have been nicer to see a longer candle. Let's see what the 4 hour looks like. This is interesting. Let me show you this. On the 4 hour, you actually had a kangaroo tail right here. At the end of this retracement, you actually had a kangaroo tail. So that's not a bad spot for one, is it? And here, not so good, really. You really don't get that bullish signal here. I mean, this is an inside candle here. That's not something I would hang my hat on at all. So I wouldn't go, but this one's pretty good. This one's not a very strong retracement, but it's a nice bullish bounce, like a bullish candle. So yeah. So that's any questions about the more volatile style of market with the retouch entry? Any questions about that? Nope. Thanks, Danny. Okay, cool, cool. No, no. Is there an optimal type of market to learn from? Great question, Jason. I would say stay away from this. I would say go to the like the euro, that we saw on the daily. These are the types of trends you want to. They're so much easier to trade. Um, you don't really want to trade these. Um, you don't really want to trade these when they're volatile, So let me pull up. Let me see if I can find you a good one. Oh, this one's gonna be wicked. Yeah. No. Where goes my New Zealand dollar? There it is. Oh, that's wicked too. Ooh, no, 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 no. Also, I would also suggest that the weekly charts are really, really easy to trade, but I know a lot of people don't have the patience to wait for those to hit. I've been trading them quite a bit lately, the weeklies. I think, have we? Yeah, pound is not. Look at these. These are pretty deep retracements. Like this is a scary one right here. This is enough to shake you out of the trend, really, this one. Um, let's see if we can find something a bit smoother. Yeah, I mean the best one the best smooth low volatility trend is the Euro daily that we've seen. This one's gonna be ugly, I can guarantee it. Yeah, Euro pound is ugly. There might be a yen pair that's kind of, interesting. No. Um, yes, unfortunately. Here you go. Gold's not bad. Gold's not bad at all. So you can say it's been going down since it cleared these lows, let's say, the sort of pseudo double bottom. So it cleared them with this candle. Um, it's a little bit messy there, but I think once it went lower than this area here, it started to get pretty nice, really, until basically where we're at right here. So what you want to see here is you want to see these boxes of retracements. You want to see these pop up like clockwork, right? And when that happens, you're in a good trend. When they start popping up like this, the only thing I would caution you is that it looks like we may be going into, it may start bouncing around now. Those might be over because now it is starting to actually take a stab back upward. So, but those are the kinds of moves that I like, are the ones where it's a pretty consistent march, and then you just kind of like silver. Here's silver right here. Silver's really nice. It probably would look, to be honest, it would probably look even better on an 8-hour chart. If you can throw up an 8-hour chart on here, or like a 12-hour chart, it would probably look really nice. But see how it just sort of stair steps down and consolidates and then drops and then consolidates and then drops. You know, that's a really easy. I mean, I still remember reading all the experts and all the banks telling me how the yen was going to go down, which meant strong yen, and I was buying the dollar yen, and I bought on a trend just like this years and years and years ago, and I think I held it for like 3.5 months before I got out, and it was one of the best trades I've ever had, just because I didn't listen to any of the people talking about the fundamentals or anything like that. I just paid attention to the chart. I didn't get distracted, and I kept adding to position like crazy, and I actually got out. I'll show you what it looked like, actually, because it was a really smooth market. If I can find it. Actually, we might have a really good smooth market on the 4-hour. Hey, there you go. Look at that. There's your 4-hour yen. That's pretty smooth. Look at those really shallow retracements. So, yeah. But let me show you what it was like. I was trading it on the daily, and it was way was it 2006 maybe? I don't know. Let me see if I can find it. If I find it on the chart, I'll know. Think. Yeah. No. I think it was. I remember it collapsed at sort of the end of the year. June, July, August, September. Maybe it was there it is. There it is. That's it. It's 2005. Yeah, so I got in on this in really close to the beginning. I think when it cleared, I think I saw this belt. This is what's known as a daily belt. I saw this belt here, and I think I waited for it to clear these highs. So on this trend right here, I got in right around here. But this is what I want to show you. Not because I want to show you a great trade, but because I want to show you what the market looked like. So I got in somewhere around here, somewhere in this area. And I actually, believe it or not, I actually pulled the trigger on this close right here. It might have been this close. It was one of these days when it closed here or here. I got out. So anyway, and I was adding it. And this is what was so great about it was it kept giving these opportunities. It kept giving these consolidation boxes, right? Like there's one right here. And then once it broke out of each of these, I would add. There was a brilliant one right here. And I didn't get nervous when it was bouncing around here because I knew it was going to break out and go higher. Or it was likely to. I didn't know that it would, but I thought it would. And it did. And so this is kind of one of those situations where this is like the L platers market, you know, where it's just really, really easy. You actually also had one right here. So you have these. This is a low volatility, not a lot of retracement, and but what you have to always be looking for is that really scary bearish candle, which in this market I think was that one right there. I think I lightened up on this one, and when this candle happened, I said, that's a bearish big shadow. It doesn't look right. It wasn't one of these tiny candles that we saw in these boxes. It was a pretty big candle, and I was glad I did, because then when this day happened, I said, wow, I really saved myself some heartache. But this is what I'm talking about. If you want to do something easy, look for a market like this. And again, like I said, the euro looks a lot like that right now. So hopefully that answers your question. Great question, by the way. And in fact, like I said, right now on the yen, it looks a lot like this as well. It's a very calm. Look at these boxes right here, you know? They're all right here. Why is the retouch riskier trading? Well, it's just harder to time it the right way. You have to be patient. Like, let me show you. Here, let's just use, for example, the let's say that you're going to trade the pound Swiss, okay? And let's say that you go, well, the pound Swiss is in an uptrend, right? Because it cleared these highs. So once it cleared these highs over here, it's in an uptrend. Well, the problem is you don't really know you don't really know where the best spot is to get in on the retracement. See, if I got in on this little kangaroo tail looking thing, it would have stopped me out over here, and I wouldn't have really had any opportunity for profit. Do you see what I'm saying? Like, this is a pretty good one, and it worked out, a really long kangaroo tail. But sometimes you think you think it's a good spot to get in, like maybe right here, but it didn't work out. That's why you have to pay attention to where it's bouncing. Like, make sure that it's bouncing on something. See, I can see where a lot of people would have pulled in here and said, look, it's off these highs, it's off these highs, look at this. I'm going to go long, and they get in here and they go, whoa, yeah, it's off to the races, especially after this big green can, and then boom, they get stopped out. And then, well, you got a big green candle here, but did it really bounce off anything over here? I'm not sure that there's really a zone here. So it's just trickier, I guess, is the best way to say it. It's a trickier entry. And look at all these that you would have been messed up on. You might have got in on that one and you get stopped out. You might have got in somewhere over here. I don't know why, but let's say you did. Well, it didn't go far before stopping you out. Maybe you tried to get in here, which I definitely wouldn't have done given this big red candle. So maybe you wait till down here. Maybe you actually wait till down here. But guess what? It didn't really bounce off these highs over here. It didn't really bounce off anything, So it's pretty tricky, if that makes sense. Yep. I'm just gonna add everybody to the basically, Joe, my assistant is gonna add everyone to the course, and so you'll be getting reminders. We just have to import the list into the system, basically. So it should be within a few days, Joe. Within a few days. All right. Okay. Cool. So we talked about the. We've got one more that I want to talk about here, guys, and this is a special type of kangaroo tail. It's not like the ones that you're used to seeing. Let's see if we can find one. Essentially, what it is it's a kangaroo tail off the edge of a pullback, and it hangs out beyond that pullback. It's got to be a strong trend, and once it happens, like there was one on the Swiss yen. I remember this one from years ago, but where is it? Here it is. So you're in an uptrend, and then you wait for the market to pull back and give you a nice kangaroo tail. So it's not going to have space because you're in a trend, but you just trade that right there like that. So it generally will occur when the market boxes up like this. It'll hang out below that. And you go above the high, stop loss above the high, stop loss below the low, a buy order above the high like that. Here's another one right here. You can see how it hangs down. See how the candle hangs below all of these candles in the box? That's the critical part here. It's got to do that. You'll also get them on downtrends, so it's the reverse where they stick up. I don't really see any on this one. They're fairly rare. They don't occur all that often, but occasionally you'll get those as well. So it's kind of like trading a kangaroo tail, except you don't have all the same. Here's one on a downtrend right there. So it's been going down. It consolidates here, and then boom, you get this kangaroo tail sticking out. The key thing here is that the tail has to stick out above the consolidations. So that one, that would have been the case right here, right? This candle sticks out above the highs of these here. And it triggered on the very next candle, and it went down. It retraced a bit, but then it really went down. So that's what a trendy kangaroo tail looks like. Does that make sense? So you've got your three entries. I know we've got a few more minutes here, guys. I just wanted to offer any questions about any specific markets. I'll tell you basically on the Euro weekly. I already mentioned this at the beginning, didn't I? Yeah. I'm going to short it at 28.09, 29.93 my stop, 26.90, 25.50, 22.90. Those are my targets on that one. So I'm definitely shorting the Euro. It's a busted kangaroo tail here. This is a weekly chart trade, so it's going to take months probably to get this one. Euro Swiss, yeah, Euro Swiss. I have to admit I haven't traded it probably in a long time. Um, maybe uh, I don't know. Maybe I traded it in 2008 was the last time, or 2009. So I just don't have a whole lot of. Yeah, I mean, I just don't know what to say. I don't really. I glance at it every now and again, but I don't really see like any opportunity here. Pullback levels on the euro, we've already hit them. Um, if you follow well, here they are right here. See this little yellow here? I'll zoom in so you can see them. If you follow my videos, you know that I've been watching these yellow levels for pullback levels on the euro. So the first pullback level was here, which was 28.70 or so, and it kind of blew through that one. And my second pullback level was right here at 29.11, and it missed that by about 10 pips. So it went to 0.1, I guess, and then fell. So it's remember the euro, or sorry, remember the weekly candles make the wicks early in the week. So as I was saying yesterday, I believe I said when the market was all the way up here yesterday, I said, well, hopefully that's just the wick and then it'll fall again. Just like when we traded the pound yen last week, the wick was made earlier in the week, right? So it's the same thing. So the wick was made. If this ends up being a big red candle this week, like if it ends up being a down candle, then we know that we've already made the wick and we've already seen the pullback. Now we still might have a wick at the bottom of the candle, but that would be whatever happens on Friday, especially the end of Friday, generally, last 3 hours or so of the day. So yeah, so I really like the euro. I'm in the pound yen still. That's the weekly the weekly breakout. Like I said, this wick right here was also made last week on Monday. This is where the pullback was. So it's kind of like the euro weekly in reverse. And then it went up. Pulled back a lot though on Friday, which is kind of scary. But I'm still holding this one. I've got a plus 10 pip stop now, so if it stops me out, it's okay. It'll it'll be like it'll cover my. It won't be. It'll be sad because it's up hundreds and hundreds of pips now, almost 400 pips. But I'm not gonna be upset. I guess I'm still waiting for big targets way up there. So yeah. So that's the other weekly trade. Yeah, I just Mark, I live in Australia as well. My MT4 chart shows the end of the day candle at midnight GMT. You can still read I use these charts for charting because it's 5 p.m. New York time. Here's the difference between if you use midnight GMT or 5 p.m. New York time. Basically, you're going to have a 2-hour Sunday candle. So your Sunday candle you kind of have to ignore because it's a 2-hour candle if you have a midnight GMT. But that's why, and to be fair, that's the only reason why I like my New York 5 p.m. close, because I don't have that stupid little candle. You can do all the same stuff that I do with the 5 p.m. close charts. It's just that you're not really gonna there's not a whole lot of opportunity to trade that Sunday candle. You kind of just have to ignore it, basically. Chris, I set my stop. Chris, which chart are you talking about? Let's talk about gold, and I'll try and work that in, Chris. So, Adis said, yeah, okay, in general, right. So I usually go beyond the candle. So I'm sorry that I didn't have much to say, Himashu, about the Euro Swiss. I just don't see much going on. Ida says, what about pullback on gold? Yeah, so I've been talking about gold and the possible pullback to these lows. See where the market did these lows? It could come up to 1243 and tag that, and then we could sell it, but it hasn't done that yet. So, it's got to get up there. This is one of those markets where it's kind of doing these jaggedy retracements. So, this is where I would sell it off of there if it gave me a really nice bearish candle. That's what I'd like to do. Oh, and so in terms of stop, so let's use the pound yen for example. Okay, so I've got this pound yen weekly chart, and is this right? Okay, that's all wrong. Let me go to the other weekly chart. There it is. Okay, so this is what happened on this one. This was a bullish candle that I wanted to buy on, basically. It engulfed this week, that week, that week, that week, that week, that. It engulfed 2 months, basically. So 1 week takes out 2 months. So that in that case, I will go long. And so then it pulled back, and people were saying, uh-oh, and I said, well, it's early in the week, and usually early in the week it makes the wick. It made the wick, it went up, and went really, really far. Everyone was feeling happy, and we're all happy because we're up so many pips. We moved the stop to break even, right? And then it pulled back at the end of the week, and was a little bit scary, and gave us a daily kangaroo tail. But, so essentially, the stop loss goes below the candle, the buy order goes above the candle. See, the high on this week was what? 74.64, 174.64. So the buy order was 174.70, 6 pips higher. And so as soon as it made that really strong move, I decided, especially after the pullback, that I don't want to lose any money on this trade. So now that's why I've done that. And this yellow line is essentially where my stop loss is at. It's at 10 pips higher than the entry price. So that's how I manage these. Now remember, it's a weekly chart, so I'm going for, I'm expecting to go another 1,000 pips, to 188. So that's kind of, it teaches you patience, I guess, is one way to say it. Any other questions, guys? I think we're just about out of time. Cool. Cool. All right. Thanks, Joe. Thanks, Mark. I'm glad that you like it. Thanks, Himashu. Thank you very much. Thanks, Danny. See you, Glenn. Take care, guys. Bye, Joe. Bye, Pan. See you, Adis. Have a wonderful week, guys. See you later, Tam. All right. See you, Peter. Bye, guys. Take care, Jason. See ya. Bye. Bye, Kevin.